You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, welcome to the option block, the portion, or I should say the program, really, on our network. The portion of our network that is bi-weekly, and the program that you all have come to know and love is near and dear to your hearts. At least I know it is for me. My name is Mark Longo, coming at you from the old network. And of course, you can join us live on this show every Monday and Thursday, noon Central, 1 p.m. Eastern, or get it wherever your finer podcasts are purveyed. And of course, hit us up. Questions, comments, insights, play along with our polls. We got a fun one going out there right now over there at Options is the place to make your voices heard for all of that good stuff. Meanwhile, let's see who's making their voices heard with me on the show today. Let's kick it off. Let's go out to the hinterlands. Let's see who's waking up from the Siberia, the polar vortex that had descended upon us last week. I think we're roughly 60 plus, close to 70 degrees warmer right now than we were a week ago, somewhere in that range, especially when you factor in wind chill. Let's see how Uncle Mike is shaking it off. Uncle Mike, how you feeling? It's a balmy, 70 degrees warmer than it was last week?
Pretty much. Normally when we get a 70-degree change, it takes several months, but it's the Midwest, so we get a few days. Gotta love it.
Yeah, you can't envy the plant life in the Midwest. Oh, we're safe. Oh no, we're dead. Oh no, we're frozen. All that good stuff. Let's see what's going on. Is he 70 degrees more or less? Is he crazy? What's going on? Let's see. Let's go out to the hinterlands of Maine, right by the edge of the country there, right on the coast, where we are joined by the Rock Lobster himself, Mr. Andrew G. from the land of the pit, by way of the line that is Carmen. Mr. G, welcome back to the show. How go things in your neck of the woods? Have you had any 70-degree swings lately, sir?
Things are going very well, although my sound is disappearing on you rapidly.
You sound fine to me, so keep it up on your end.
I do? Okay, so it clearly is just my headphones are just deciding not to work anymore.
Doesn't like one by one your setup is falling apart over there.
Now you sound great.
Now I sound great. Well, that's good to hear. I'm hearing that the live stream is having some issues here as well, but everything sounds good to me. So tell you what, I will reconnect for the live streamers out there while we keep on rolling into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. 1 second here while I get everybody rebooted here on the live chat. There we go. I apologize if we booted you out, but hopefully that will maybe fix it, because it all sounds giddy and delicious in my ears. Mr. Uncle Mike, does it sound good to you, sir?
It is giddy.
Well, there you go. So I think it's just the Rock Lobster and my crazy producer here. Let's see. Hopefully, if that fixed you, if you're having issues there in the live chat, hopefully it's not something on our end, because we have so many shows to do today. In which case, we shall keep plowing through. You know, whenever you have these extreme swings in the weather, it does seem to bring out the ghosts in the machine. Let's hope no ghosts are lurking over there as we keep on rolling into what is trading out there right now. It's one of those weird days, listeners, where the market decides, we had last week, we were joking about the lingering malaise, the old 80s, old 80s treaties getting tossed by the wayside, the prospect of nuclear war. Once again, perhaps a small, distant prospect, but still, old treaties being thrown by the wayside. VIX didn't seem to care. The market didn't seem to care. Of course, over the weekend, we had talk of the president not ruling out any sort of invasion of Venezuela, because, hey, that would make sense. Market not really seeming to care much about that today either, as we're seeing most of the major indices up slightly. It depends where you're looking. NASDAQ feeling the love, though. Dow kind of the laggard, only up about a 0.15 actually of a percent out there. S&P up about a third of a percentage point, and the tech-heavy NASDAQ leading the charts to the upside, up nearly a full percentage point out there. We've also got, let's see, oil taking it on the chin a little bit, coming off that 55 level, and WTI about 54.5 right now. Gold also taking a bit of a break, off about a quarter of a point, right about 13.18, still north of that 1300 level. And of course, our old friend VIX Cash just deciding to relax today, shy of that 16 handle, down in the 15 range. So my prognostication for a little bit of vol staying, not vol coming back in, but kind of staying where we were so far, at least beginning of the week, not looking good. But again, we got a whole week. Anything could happen. We shall see. 15.95 coming into option block showtime. Let's go back to Mr. Uncle Mike. Sir, how are things looking in your neck of the woods?
I mean, they're good in that we're above the 270 mark on SPY. That was a number with which I was watching. We're actually up, at least in SPY, roughly $20 from the beginning of the year. So we've had a lot of upward movement in this marketplace over the course of the last month, and it seems like we're somewhat recovered from the downturn of last year. At least we're ahead of where we were at the beginning of 2018 anyway. I think what's going to be interesting to watch is to see what kind of push through we can, or what kind of carry through we can keep with the momentum. We've had the bulls come in over the course of the last month, and is this going to continue? That's the major question, of course. I would not be surprised if we had a little bit of a pullback over the course of the next couple of weeks. I'm actually took a few deltas off the table on my aggressive strategy this morning, but on it, what I think is going to happen is that I could see us pulling back a little bit, but I'm still bullish as always. But in times like this, after we've had a 20-point run up in SPY, I think it's important to be cautious as well.
Uncle Mike taking some deltas off the table. Interesting stuff. Well, he's our resident permabull listeners, so bear that in mind as you're hearing him scaling back a little bit. If you're wondering, speaking all this volume and levels, if you're wondering if we're at those mythical, magical levels where we are technically out of correction, yeah, we kind of blew through all those a little while ago. The Dow needed to be a little bit about 24,000, 23,971. We're coming into showtime. We were north of 25,000. It was 25,771 coming into showtime. S&P needed to be 25,86. And we were at 2710 coming into showtime there. So we're out of correction by just about any technical measure you could look at out there. Mr. Rock Lobster, sir, what is consuming your mind share and that of the pit chat today?
The mind share is, one is we've actually had a pretty steady declining VIX for the last 2 weeks, I think. I think we were trading quite a bit higher. This is one of the days where they actually let some of the air out of the futures, so that extra future premium is drifting a little bit. I think the VIX futures are almost running ahead now of where VIX cash is. Remember, VIX is 30 days, so I think the weird disconnect is VIX is carrying the potential of this trade, the trade war thing, coming to some sort of end or something along those lines. And then we have the market and earnings not so bad. So they, even what like Apple pre-announced and Nvidia pre-announced, and they're bouncing off their lows. So Facebook, good earnings. So all these things I think are just adding up to, a slightly better cycle. So if we can get there was actually a good article today by Martin Feldstein. I think he was an old council, chairman of economic advisors a while ago. But he's like, right now they're basically, they're arguing with China over, they just don't want Chinese partners. You don't have to share technology anymore. I mean, that's the sticking point. It's not a trade war. It's just, you got to just meet your WTO obligations and just do business without having to give away the store. So I think that's been a big part of the whole thing anyway. Probably 90% of the whole trade war to begin with. It was something that China didn't want to give up on, and it looks like they're kind of being pushed in that direction. And we'll see how successful it is. If it actually is, if they do get some kind of treaty out of it, and then Congress doesn't screw it up trying to ratify it, if it even is a treaty that needs to be ratified, then I think it's off to the races. So I think that's why the VIX is, because it's 30 days forward looking, is still, it's still in the 16 handle. Short-term vol is down to, I think, is actually relatively inexpensive, is down to maybe the 12 handle at the money in the Spire SPX out to Feb 15. So the options are inexpensively priced in the short term, I think, and with the back end of looking a little more toward the potential of a trade deal or not a trade deal. And then, so I think that part of VIX is coming down a little slower just for that reason. Other than that, social media, you got Google bellwether tonight. So if social media is outpacing like the good old fashioned growth companies like Apple and Nvidia, that, they make a lot of hardware and social media still is kind of just pounding through. That could be bullish for the Qs as well. So you got all those things. And at least for right now, it's making for just what I would call like a benign market going up. But, the benign market going up last year, VIX was, or I should say last year, but in 2017, VIX was 11 or 10, and now it's 16. So there's still the overhang, actually, I should call it the hangover, has not worn off.
Speaking of wearing off, sir, how do I sound to you now? You're the one who were hearing all the problems over there. Does it sound good to you?
You sound good to me right now.
All right, so that's hopefully whatever you have infected us with, sir. Hopefully we have purged it from the system. All blame at the end of the day. All blame at the end of the day points to the one-eyed rock lobster out there. Let's see what else is pointing, what else we can blame, what else we're looking at out there on the street. Lighting it up coming into Showtime, most actives out there. We had VIX doing pretty decent paper today. It had about 371,000 contracts coming into Showtime. The ADV is a little bit shy of 500,000, so pretty robust, close to the ADV already. Coming into Showtime, SPY had hit exactly 1.0 million contracts. ADV a little bit shy of 3 million out there. SPX was at 410. Their ADV is 1.38 million, and the Qs are at 330,000. So ADV 789. So pretty robust day for many of the products out there. Of course, what wasn't robust, unfortunately, this goes back to our question of the week from earlier in January, so earlier last month, but it's hard to believe we're already in February. But yeah, looking at the numbers, we were kind of prognosticating what the year was going to look like from overall volume. Remember, 2018, a record year, 5.1 billion options contracts changing hands last year. It seemed like to me and to a couple others out there, I think the Meatball and a few others, that it might be a bridge too far to make that happen again this year. Again, I would like that to happen. It would be good for the business, but maybe a bit of a bridge too far. The January numbers perhaps reflecting that January volume from the OCC down nearly 12%, 11.9% after what they term a record-breaking 2018. So they like to put their they put their spin in the headlines. That is their job, after all. Again, they also point out the volume was the second highest January in OCC history. So again, it was good numbers. But last year, January was a little bit more rock'em sock'em, I think, than a lot of people tend to remember. They cleared 422.6 million contracts. The second highest ever, but well below about 12% below the volume from last January. A year to date so far, the ADV is at about 20.1 million contracts. That's 3.6% lower than 2018. Again, they point out record-breaking ADV of 20.8 million. Overall, remember, they clear a lot of stuff at OCC, so let's drill down a little bit. Options overall, exchange-listed volume reached 416.2 million contracts. That's down exactly 11% from last year. Equity options hitting 375.2 million contracts over there. That's an 8.8% decrease from January. Cleared ETF volume, options volume, I should say, that is about 158 million contracts. That's down also 8.8% from last year. Index options volume down 27% to 41 million contracts. That's a big hit. And then the futures, as you mentioned on VolView's futures, this is kind of the last point-on-point comparison we can make to the pre-XIV meltdown days, and January of last year was a robust one. This year, not so much, down nearly 50%, 47% pretty much from January. Again, that shows how much of a part XIV and all the rebalancing and reshuffling of those products played in futures options, particularly VIX futures option going forward. Mr. Rock Lobster, I think you were with me on the fact that it might be hard for them to do it again this year. Do these numbers come as a surprise to you, or is this perhaps reinforcing what you already expected?
I think it is reinforcing. I mean, we had a crazy volatile year last year. Do you remember Tosaw closing all the short put spreads after January? I think he was like freaked out with how hard we were rallying. He's like, this second. He was putting on.
It was too much bullishness for the perma bull. It was too much bullishness for the perma bull.
What the heck is going on with this rally?
I couldn't handle it. It was scary.
Too much upside.
All right. So, and you and I think we agree on this because we don't agree on much long ago. But I think we agreed that like losing XIV and most of UVXY and SVX and all those products getting trashed, that was a pretty good, huge natural seller of vol in those products, and they are gonzo. And look at January. It's not like January we didn't move. What were we up, like 10% or 8% or some crazy move in January from the bottom? So it's not like there wasn't a move in January to, get people trading VIX futures. So I think it was and I think if we have another, what I would call solid bullish year, it will generate really good volume. But last year, you don't normally get two vol events in 1 year and a all-time high rocket bull market. That was a pretty big recipe for volume, right? We had all-time highs, we hit it twice, and we had insane volatility twice in 1 year. So that is a recipe for some options volume. And I think the death of XIV and the neutering of UVXY and SVXY has just crushed a lot of the volume in the futures. And that's what we got. So, I mean, it looks like the market hasn't really been hurt, the fact that XIV is gone. But I'm not quite sure why I think we had a lot of the muted future moves we had at the end of 2018 in October, November, December. I mean, the VIX cash moved, but the futures, I think, still, they didn't move. They weren't quite as bouncy. And I think maybe that's just because XIV, my closet idea is XIV was not there anymore to go bid up all the stuff they needed to cover. So I think that's part of that, definitely part of that reason. So I'm not seeing that big volume so far this year, although the year's off to a good start. I mean, what can you say? It's off to a good start.
It also is off to a good start, at least today. You think of sexy tickers out there. You perhaps don't think of the world of bleach and bleach derivatives, and yet that's exactly what was lighting up the tape this morning. Clorox, not a name we talk about here much on the show, trading today coming into showtime, about 160, up about 10 handles, or a little over 6% out there. So a big move for Clorox. People liking what they're seeing out there. Posted adjusted earnings of 140. They were pricing in 130. Let's see, their ADV out there is about 1,400 contracts. Coming into showtime, they had about 6,500 contracts on the tape, 2/3 of that in the calls. So blowing away their ADV, and a lot of upside action, as you go figure. People liking calls on a name that's up roughly 7% today. So Bleach, the sexy name, they had priced in actually going into their earnings. They were right about 150 on the stock price. They were pricing in about 522. They delivered over 1070. So outperforming their straddle by about 2x out there in Clorox land. Again, the earnings move reports, all those are up on the site right now. One coming out soon. Keep an eye on it for Google. But you can't see it yet on the site, but if you stay tuned to the show, we can give you a little bit of a preview of that later on in the Around the Block. Meanwhile, though, we have to keep on rolling into our next segment. It is time to go into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we break down what the heck is going on out there on the weird, the wild, the wondrous side of the fence out there. We are Eye of Sauron, watching, always watching, looking, scanning, seeing what's trading out there. And let's see, lighting it up. Let's kick things off, Mr. Rock Lobster. Let's keep it simple. Start things off. Starting out the week, people are still in their Super Bowl hangover haze. We'll get a question for that for you guys in a little bit later on, maybe in the mail block. But looking right now, kicking things off, let's keep it in the ticker everybody likes to talk about first thing of the week, of course. Good old PAGP. PAGP, a.k.a. Plains GP Holdings. Today, trading 23 and a quarter or so, up about a dime or so on the day. It's not a huge mover on the day. Let's go back and look and see what the heck's been going on out here before we break down the options activity that caught our eye. And a year ago, good old PAGP was $20.19. So it's a wee bit higher than where it was. It had a bit of a rally over that time, got up to 25 around early summer. Actually, that's April timeframe. And then in midsummer, August or so, mid to late summer, they got up close to 27, not quite, threatened that level. And they kind of sold back off again, and all the tumult of October got down to about 19. Actually, they broke the 20 handle, 1986. And then 1964 back on Christmas Eve. Christmas Eve was, or actually looks like this, yeah, Christmas Eve. So yeah, rough day for a lot of stocks, Christmas Eve, before kind of turning it up over the coming week and rallying back from 19 and change up to 24. So it's been quite a run of late for PAGP. Now they're kind of vacillating in that 23 to 24 range. Sounds like someone, Mr. Rock Lobster, thinks they're going to be vacillating at least for another month or so. And looking to harvest a little bit of the ye old risk premium. Stop me if you've heard that one before. In particular, it was the Feb 24s lighting it up nearly 12,000 times, 11,800 times. Someone not quite crushing the bid, but pretty close to it. There were a quarter bid at 40 cents coming out. Someone coming in for about 12,000 off of the bid at 26 cents. Again, this is opening, no real OI tomorrow. Worth noting, they do have earnings tomorrow. So someone taking advantage of perhaps a little bit of earnings juice in those calls to get a whopping 26 cents for, a few weeks left of the good old primo. But again, it is earnings time. Looking at this chart, maybe you can see why this guy's not too afraid to let the stock go to the upside. If he drops it a little bit north of 24, he's only missing really a couple of handles of upside. Again, if you believe this chart going back a year, they could blow the doors off on earnings, in which case our friend here is not looking perhaps quite as happy. Either way, though, if that happens, he's picking up his $306,000 roughly out there. So not bad for a month or so's work. Mr. Rock Lobster, what are you feeling here on a little bit of the old harvesting the risk premium, perhaps? Going into earnings, though, in everyone's favorite, PAGP.
Well, I think $300,000 is a good month for.
I don't get out of bed for like $500,000, but 300,000. If that's good to you in Maine, with your inflated, adjusted, crazy local currencies there, I could see that being good for you. You can buy a lot of LL Bean with that.
Yeah. You can. So I would say that this is the 1% per month minimum on for premium writing. And with the dividend, that generates probably 15, 16, 17% a year it's just another Plains All American Pipeline is another a gas, one of the gas paths. I can't remember if it's the upstream or midstream pipeline company, but we see this all the time, that they're just funds use these for income, literally income, and they're happy with it. So we see it all the time. It seems to work because usually people only do stuff that seems to work. So I say that with a slight giggle. But I guess as a buy right strategy, it's not a bad buy right strategy.
I'll say, so you kind of haven't been paying attention to the many years of odd block we've been doing now. If you think they all work, when the mantra for this segment is the size money, not always the smart money, then maybe that should give you some indication of what is up out here. Let's keep looking. Found another weird one. This one coming to us. We have lots of different scanning tools running all the time. This one coming courtesy of our friends over there, the Flowmaster and Trader. Give them a nice plug. They have good stuff over there. A lot of our most actives on the site coming from them throughout the day. You can always click through. Of course, if you're on the retail side, you can always go try their What's Trading version, a little bit scaled down. Still has a lot of the great data, but in a much more user-friendly, bite-sized type interface. And they picked up some interesting, looks like someone legging into a vertical, Mr. Rock Lobster, then coming in maybe for some more of that bottom leg of the vertical, or just crazy call palooza. Maybe call it what you will, but someone trading up the calls today in Mattel, near-term upside in Feb. Before we get into that, though, let's see what Mattel has been up to. Of course, ticker symbol MAT, M-A-T. Trading today, 12.38, up about 16 cents or about 1% or so. So it wasn't today's big move that drove this paper here. A year ago, Mattel was trading 16 and a quarter, so about 4 handles north of where it is right now. Then it sold off promptly in March to about where it is right now, before rebounding back up to about 18 in June, then kind of vacillating in that kind of 15 to 18 range for the better part of summertime, getting up to 16 again in September, then kind of in all the tumult, and then once again, December 24th, the nadir for so many names, including Mattel, 9 and a quarter. So it's up roughly a third since Christmas Eve. So that's been a good run. 3 handles for Mattel since then. Again, another one kind of bouncing up almost within a week of Christmas. It just took off, hitting 1163 by January 9th. So the second week of the year, it was trading 1163. So this thing just kind of took off like a rocket, like our other name did too. And yet we didn't see call activity then. We're seeing call activity now, which is catching our eye to the tune of, like I mentioned, call it a vertical, call it a call palooza. We shall decide together here. It was, let's see, going on here. We've got, starting off the day, because these are all, that's another thing, these didn't go up marked as spread, so we can kind of intuit maybe there was some relation to them, but perhaps not. Maybe just a call palooza. Starting off earlier in the day with the 13 calls going up 5,000 times for 40 cents, lifting the offer. They were a quarter at 40. Again, sounding kind of similar to our last name we just profiled. Opening paper here 5,000 times. Then later on in that, actually a few minutes after that, about 15 minutes or so later, someone coming in for 5,000 of the 15 calls. Splitting the uprights there. There were dime at 15 cents coming in for the old school eighth. 12.5 cents, 5,000 times. So perhaps someone legging into a vertical there. Again, they are splitting the uprights, so it is kind of hard to tell. That is also opening paper. They could also be deciding, you know what, we like some more of that juicy upside. We want a Tosaw style stupid, and we're going to do it 2 handles north there. And then also later on, about 2 hours or so after that initial trade, we saw someone coming in for more of the 13 calls. The market had changed then, though. There were 40 cents at 50, obviously reflecting the fact that someone's gobbling up some upside here. They had moved that skew. The underlying had moved probably a little bit too, but not a ton. So I think that was probably someone working a 40-cent bid coming out, so that 40-cent bid maybe wasn't reflective of what the real bid was. And then they went up at 43 cents. So maybe someone coming in, taking advantage of that bid to dump some at 43 cents, perhaps 4,321 times. It could be our friend getting out of his initial 40s as well, but then doing it all for only 3 cents. That's barely going to pay for your round trip. And on top of that, only doing it 4,321 times. So, Mr. Rock Lobster, this is a bit of an interesting one. Could be someone legging into a ratio on this vertical. Maybe wants to do the 13, 15, 1 by 2, or I should say really 2 by 1. So long 2, short 1, perhaps. That's probably the way you might want it. Also worth noting, maybe it's someone just dumping or closing. Maybe it's someone just inspired by that earlier paper coming in 2 hours later. Worth noting, Mattel does have earnings coming up on the 7th, so this is an earnings play as well. So a lot of interesting stuff here. Mr. Rock Lobster, this one could be looked at a lot of different ways. What's your spidey sense telling you here on this kind of funky call palooza in Mattel?
This feels like just a straight earnings buy. Maybe Mattel turns the corner after a couple of tough years, getting hurt by Fortnite and everybody else. I think that's sort of how that sets up. That's how I would. It just looks like somebody's buying a cheap call spread, and they're looking to kick a Gautowski field goal. What's his name? Gautowski? I can't even say it right. I'll have to ask Tosaw. Gostkowski?
There's so many Towskis on the Patriots. It's hard to keep them all straight.
I know. And then you got and then there's the Gronkowski. There's a lot of skis.
Don't ask the old Bills player of the Pats. I'm sure there's some lingering love there for the Pats with the Bills. But yeah, it does seem like there's some upside call palooza here. Whether they're legging into a vertical or doing the stupid, or either way, there's upside interest here in Mattel. So maybe something worthy of note. If you're interested in Mattel, maybe at the very least you can take advantage of that. It looks like there was some size bid for these calls coming out, so maybe you can leg into some verticals. Even if you don't really feel what these guys are feeling, you can still take advantage of the distortions that they cause. And that's another reason why we profile this stuff for you guys. So that you can trade around them, even if you don't have the same, perhaps, underlying sentiment that they do. All right, let's round things out here. We're going all over the place today. We're rounding it out. Going up north. Don't need to go that far to find the frozen north. At least last week it was right here. This week, got to go back north again, up to the Canadian Pacific Railway, in particular, ticker symbol CP, trading today 203.64, off about 3/4 of a buck, or about 1/3 of 1% out here. Let's go back a year and see, what's been up. Oh, CP, another one, having quite the rally. A year ago, they were 180 or so, and they dropped to about 174.5. And ever since then, it's kind of been straight up. They got up to about 190 back in January of a year ago. And hold on, I'm looking. This chart that makes more sense. That's better. They were showing me screwy data again. Let's start that over again. They did get down to 171.5 about almost exactly a year ago, early February. Then they kind of rally-hoed up to 188. Then they kind of vacillated around 170 and change for a while before early summer kicking into July, and then they start rallying up again. 180, 190, 202, all the way up to 222, almost 223 on October 9th. Go figure, their high would be 2 days before the great tumult that shook the world on the 11th. And then, of course, in that tumult, they kind of sold off again back below the 200 handle. So off about 20-odd handles there, and then kind of selling off again, right around Christmas Eve, back down to 168. And then another one, pretty much didn't look back from Christmas Eve, right back up, 170, 180, 190, 202, right now about 203 again. So it's kind of been an immediate reversal of fortune for this one. Let's see what caught our eye out here in CP. It was the March 210 calls. So out of the money calls here, going up below the bid. Looks like someone perhaps aggressively harvesting some meaty risk premium here, Mr. Meatball, to the tune of $2.91, 3,355 times. Again, these have earnings coming up, on the 17th of April. So there are no earnings in this trade. This is a March trade. So this is not earnings juice. This is just straight up. These things were 3 bid at 340, and someone went up $2.91, 3,355 times. So, Mr. Meatball, maybe someone deciding that $3 or so was kind of rich for a 210 call, only out to March, and deciding to crush it, or maybe looking at this chart and deciding that they're happy getting out at 213, given that the recent high up to, well, it's 222, so they're missing out a bit of upside, but perhaps clearly not too concerned about that because they're crushing that bid, sir. What are you feeling out here on these fairly meaty March calls in good old CP?
First off, you need to learn the difference between a meatball and a lobster.
I apologize for sincerely defaming you, sir.
Twice.
I mean, I'm thinking meatballs.
Because you kept saying these calls were meaty, and you just couldn't get off it. You just could not get off the meat concept.
You're right. It is hard to.
He calls the meatball lobster. If that makes you feel any better.
I do that all the time as well. So when you're not here, you're represented as well.
Look at Tosaw coming in there and saving your bacon at the last minute.
He knows where his bread is buttered, sir.
He knows. This one again, it looks classic buy right thing. Same thing, 1%, a decent premium. I think these railway companies are taking advantage of all the gas that they have to move around since nobody's building pipelines, which I always found ironic. So you don't let them build a pipeline, which is relatively clean, but they're still going to move all the gas by a train anyway, which seems to be less clean and more spill prone than a pipeline. But I just, sometimes the common sense of things, it evades me. But that's what I think that's what CP is writing that. And this to me just looks like a primo sale. They did a good job of smacking the premium. But this is also one where it's a pretty illiquid stock. So trying to get, 3,000 calls off. I mean, oh my gosh, I remember trying to absorb liquidity like that. It'd take you like 5 days to digest it. It's like a snake trying to eat an antelope, for crying out loud. It just takes a long damn time for liquidity providers to figure out a way to position all those calls that somebody just sold.
Yeah, it's always fun. Speaking of not taking a long time, though, or maybe you said taking a long time, the opposite of that right now. It's not taking long for people, as you pointed out earlier, Mr. Rock Lobster, and the show chat here. People not taking a long time to pick up their old habits out here in VXX. Now that VXXB is live and kicking, Cboe's putting out claims that they're going to get tighter out there, so we shall see. Our audience happy about that, but people coming in gobbling up the 32 half puts. So going back to their old habits, about 10,000 going up for 22.5 cents this morning. Total looks like about 13,000 on this strike. Again, there's 20,000 open already. But if any indications are to be had here, it looks like people perhaps going back to their old ways here in VXX. We shall see. Meanwhile, we shall see what the heck's going on in the world of strategery. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, this is the portion of the show where I toss a hot mic to Uncle Mike. And we shall see what we get. Uncle Mike, sir, what you got cooking for us this Monday block of strategery, sir?
All right. Well, today I want to talk about two things. So we're going to kind of have a twofold strategy block. The first thing that I want to talk about is adjustments to a bullish butterfly. So here's what I mean by that. A couple things can happen on a butterfly that when you're being bullish. So in other words, let's say that you want to be bullish on, let's go back to our good old friend XYZ stock. And let's say XYZ stock's trading at $100 a share. And you want to have some exposure to XYZ stock, but the premium's a little bit high for you. So maybe you buy you want to just put a little bit on the table. So you buy a 105, 110, 115 call butterfly. 105 being long, 110 being two shorts, and 115 being long. Now, how do you adjust some of these? Well, here's a couple of ideas on some things that I like to do when things are going my way, and ways with which you can do things if it's going against you. Well, first off, let's say that it goes against you. Well, the first move that I would have would be to perhaps roll down the 110 calls to where maybe we could roll them down to, say, the 107s or maybe the 108s, and then create an uneven one if you still wanted to have a little bit of skin in the game. Another thing that I would do or look to do would be to perhaps maybe see if the two short calls that you're profitable on, if the market were to go down, see if there's a way with which you can sell a 105 call at a more near-term time to create a calendar spread for the same thing. By doing that, you may be able to continue to collect some time premium on it, or it might not work. You never know, but that's another thing with which to look at. Ultimately, though, the thing that I typically like to do the most if a long butterfly is going against me and I don't have a lot of skin in the game is just get out of it. When in doubt, get out. And so by doing that, you've actually had some exposure to the marketplace which you wanted. You had a little bit of deltas on the table and it didn't work. You didn't really lose that much. If it's really a small amount of money, you can just sit on it and manage your risk by taking such a small position. But ultimately, I think probably the best way of managing against a downward move in a bullish butterfly that you buy out of the money is to simply get out of it. Now, what if it goes your way and market's kind of moving your way and you're concerned that XYZ stock's going to be at 110 before you know it, and all the gamma that's going to be working against you on those 110 calls is going to bite you, and you're really concerned about that? Well, it's a valid concern. Well, the first thing that I like to do, if it starts going in my favor, a lot of times what will happen is vol will come down. Markets go higher, volatility goes lower. One thing with which you can do as a safeguard is you could roll in the 115 calls. That's the short leg, the long leg of the butterfly on the top side of it. Perhaps you could sell the 115 calls and then maybe buy some 112 or 113 calls. That's one thing with which to consider. Now, let's say that the market then goes higher and higher and higher. You know that you'll still be profitable even if the market goes up to infinity because of the fact that you have those 112 calls and the short side of your bullish butterfly is going to be less than the long side. And by doing that, you have the ability to make sure that you know that you'll have a guaranteed profit on it. You're actually buying more premium to create an uneven butterfly. Now, by doing that, it might sound kind of concerning at first that you're buying more premium. I'm like, Mike, what kind of a crazy idea is that? But keep in mind, if the market's going your way, that means that in theory, once again, it's theoretical now. You have to do your own research yourself to see if this works in practice with the underlyings with which you trade. In theory, the long calls that you buy will be less expensive. And if some time has gone by, you'll have time decay a little bit in your favor. And so those 112s or 113s might not cost as much as they did initially, even though the market's gone your way a little bit. Okay, now, let's say at that stage, market's continuing to go your way. And as you might be noticing that you're making money on the 105 call, you're breaking even on the 110 calls, but then you're almost kind of losing, maybe starting to lose a little bit of money on the 112s. Well, at that stage, and maybe you've made a little bit of money on them because of the initial run-up, maybe at that stage what you could do is you could roll back up to the original position. If you have a little bit of a profit on the 112s, you can go back up to 115, and then you realize that the 115s would have a much lower cost basis because of the profits you made on the 112s. Or with that, you have the ability to be right back to where you started for a lesser cost basis than the small cost basis you had in the first place. As the market goes higher, theoretically, volatility will go lower. And should that be the case, you can create the same thing all over again, except this time with a little bit more gamma working in your favor for the 105 calls. So just a few ways with which to look at bullish butterfly. Now, the second thing that I want to talk about is something that I like to refer to as a line in the sand. So right now, for example, I'm starting off a line in the sand risk reversal, meaning I sold a put with the intention of using the money sold from the put to buy a long call. And the markets didn't really go up that much for a while. And so now they've passed one of my lines in the sand. And one thing that I will be looking at probably over the course of the next couple days is where do I want to buy a call? Now, during that time, I have not been long a call option for a couple months now with this risk reversal, just because number one, the markets were going so much lower and I was adjusting on the short puts. But number two, if we do come up to my line in the sand, which we just did the other day, then we have a lower volatility environment and the cost to purchase the long call will be less, on top of the fact that I did not participate in any of the time decay on the long call side of this risk reversal. So with that being said, the line in the sand is something that you can be very versatile with. So let's say that you don't know whether or not you want to make an adjustment on a short put that you sold, or when to hedge it, or when to buy another call, or whatever the case may be. But in the meantime, you're making money from theta. Well, if you're concerned with that, the line in the sand might be a good alternative for you, just because of the fact that in the meantime, you're making money on theta, but you don't have to make a decision until the market hits, or your underlying hits your line in the sand, whatever way it may be. But with that being said, make sure that you do take action when it actually hits your line in the sand, or at least have an idea of what you want to do when it happens. The reason I like the line in the sand is because there's a lot of times that I don't know what the market's going to give me, and I don't know how long something will take. So with the line in the sand, It's not just to be lazy and not make a decision till I have to, but the purpose is that I know that so long as the market doesn't touch my line in the sand, I don't want to do anything anyway. But if it does touch it, you have to be prepared to act and have a plan of what to do. When you're creating this trade, have 3 or 4 ideas in your head as to what you want to do should the market hit your line in the sand. And that is the double strategy block for today, the first one of February. How exciting.
I don't know, Mr. Rock Lobster. He's taking your line in the sand concept and levering it up to a risk reversal. Are your lawyers are you on the phone with your lawyers right now, sir?
You know what? It wouldn't surprise me that people steal my ideas. I mean, you stole my VIX zone idea. You know, you stole my masterclass idea. Not just messing.
Masterclass. I enhanced your masterclass.
I think it's important because you got to make a decision. Like you can't beat around on it. Like you're in or you're out, or you're done or you're in. But it's good to have that. So I applaud Mr. Tosaw for his conviction.
Well,
thank you, sir.
We are in and then out again to another segment. It's time to do a real quick hit on the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. By the way, I take umbrage, Mr. Rock Lobster. I've done nothing but improve your masterclass by calling it the proper way, the masterclass. So if that somehow is stepping on your classes, sir, then I take umbrage. But I digress. Let's get into our questions. We ask you guys questions. You ask us questions. Question of the week we asked you last week was, of course, which of those big names popping off last week you guys wanted to trade. When it finally went out, Amazon was the clear winner. 45% saying Amazon. Even the big moves in Facebook and Apple didn't really phase you guys that you wanted to play. Only 20% saying Apple. 18% saying Microsoft, which didn't really do a heck of a lot of anything. It's getting back maybe to its old most reliable premium sale in the business mode. We'll see. Be careful with that one because it has moved a bit. But for a while there, over close to a decade, it was a pretty reliable premium sale. And then number 4, 17% for Facebook. Coming into today, thought we'd ask you a fun one. Everyone's still recovering from their Super Bowl haze here, Super Bowl hangover. We said everyone's shaking it off. Let's start the week fun. Let's have you apply your trading mindset, your trading mentality to next season and next year's big game. We gave you 4 choices. If you had to buy a call on one team that expires in the money if they make it into the big game. Don't have to win the Super Bowl. They have to make it in the Super Bowl. So basically, which teams are you picking to make it into the Super Bowl? We gave you 4 choices. The Pats, the Rams, the Bears. Of course, we are Chicago-based, so we are legally obligated. I think we'd be booted out of the town. We didn't put the Bears in that poll, even though they were a surprise contender this year. And the Saints. Mr. Uncle Mike, as our resident bull, I'll let you go first. You can write in for the Bills if you want. I said bull. Resident bull and Bill. You can write in for the Bills if you want. We allow write-ins in this. And then B, who you think our audience is picking?
Well, as painful as it is for me to not write in my beloved Bills, I don't know if they really have much of a chance next year. The Bears, I think their schedule is going to be a lot tougher, but I think they are going to be a good football team next year. So if the Bears stay away from injuries with their tougher schedule, I would probably pick the Bears. However, with that being said, I still think the Patriots are the best football team of them all. So I'm going to say Patriots and Patriots. It has nothing to do with my love or my feel for any NFL football team, but you can't deny it. They're the best football team. And so if I'm going to buy a call on something, I want to buy a call on the absolute best, and that's the Patriots.
Yeah, they were certainly, Brady wasn't too impressive tonight, but certainly his receiving core, Gronkowski and Edelman in particular. Edelman looked like he was a ninja out there. I've never seen anything like that out there. Double covered and yet open all the time. It's something that was otherworldly, but we'll keep that to another one. Mr. Rock Lobster, technically you're in New England, so you're allowed to vote for the Pats and not be castigated for it. Do you have a voice here, sir?
I think, who's going to, everybody, that's how many Super Bowls they've been to in the last 5 years? Almost all of them. So as long as Brady's still there, they got another shot. I just don't know if he's going to stick around, if he retires or not. That would be my biggest question is if he retires.
He's not going anywhere. He's addicted. He's already said he's not going anywhere. And he posted a video. It looks like Gronkowski probably may be staying around too. So all the dudes are staying around. They all apparently have some mystical fountain of youth over there in Boston. By the way, let's see. I thought the Pats would be running away with it too. So far, maybe shall we say, some of our local audience taking and running away with it. 30% for the Bears right now, but actually the winner, 35% right now with the Saints. So a little bit of love for the Saints. I saw a number that it was the lowest rated Super Bowl ever in New Orleans history. They all boycotted the game due to that, shall we say, ridiculous call that was made against them. They're all partying on Bourbon Street. They had a better alternative anyway. Only 20% for the Pats, number 3, and 15% for the Rams. Silly stuff. We like to do silly stuff here every now and then, particularly on a fun start to our otherwise somewhat quiet week. Let's see here really quickly. Let's see if we can squeeze one more in. Let's go here to F Contango Trader. He writes in a lot. He was writing into VolViews into the show last week, complaining about the spreads in VXXB. We were just talking about our old friend VXXB saying they're too wide, and I said to him, well, kind of wait after January 31st, when then everything kicks into full gear. Hopefully, maybe we'll see some tighter markets. Cboe is coming out this morning, or actually, the 1st, so the day after that, saying they're excited to announce VXXB options will be eligible for trading in penny increments on all Cboe exchanges. So that, of course, going to help maybe tighten things up a little bit out there. And he wrote back to that saying, take that, Meatball. Because Meatball was saying maybe they shouldn't be in pennies because the risk isn't there. But at least Cboe thing. And Contango, happy to see that. And I understand why people want that. They've grown accustomed to a certain level of spread in primary old school, shall we call it, VXX. So they want to have something similar in VXXB. And when it's not there, people tend to get angry about that. So maybe he's right. We were thinking it would take a little bit after the 1st of February for it to kick in. And it seems like maybe that is indeed the case. It's not stopping somebody from printing 13,000 of those puts today. So clearly people are trading it up. Meanwhile, though, we have to keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, I promised you a sneak preview of some of the earnings move reports coming up for big names, and we're going to do exactly that. This isn't even available yet. This is all embargoed information, but you're getting it early here if you're listening live. Listening to the podcast, it may be indeed after the fact. We shall see. But yeah, this is still a big week for earnings. Today, of course, we had Clorox and the other Sysco with an S. Then tomorrow we have Disney. We have Snap coming out after the bell. Disney looks like they're after the bell as well. Electronic Arts, so the gaming sector. GM on Wednesday, Spotify on Wednesday. Thursday we got the old Twitters. WWE, for those of you out there, that was one of the best performing stocks of last year. Who'd have thunk it? So maybe one to keep an eye on this year. And Mattel, we just talked about them earlier with some options paper. And Friday, Cboe, I think I've heard of them. And Exelon and Hasbro as well. So some big names. And coming up soon on theoptionsinsider.com, you'll be able to find earnings move reports for a lot of those, including I neglected to mention because they're a big one popping off after the bell here soon, is good old Alphabet, a.k.a. the Googs, a.k.a. the GOOGLs. And the earnings move analysis in now from our friends over there at ORATS. They were coming into time of the report. The Goog was trading 110.75. The GOOGL, a.k.a. Alphabet, was trading 11.18.62. They were pricing in very similar straddles. They were pricing in 43.76 on the Googs and 43.89 on the GOOGL. In the past, they've averaged expectations of about 45 to 46, roughly 45.5 to 46.32. So they're pretty much in line with that. Historical projected moves are about 31.70 to 31.80 or so. And the actual moves, the average of the past actual moves they've delivered is right around 34.75 for the Googs and 35.76 for the GOOGL. So they're a little bit rich compared to their past moves, perhaps expecting a little bit of some action out there. Let's see, that's pricing, and that's about 37% implied vol on these. Interesting stuff. They're expecting that vol to come in, of course, after the big earnings crush to around 23.5%. So interesting stuff out there. You can check out that for this ticker and a bunch more on theoptionsinsider.com very soon, pretty much, maybe even shortly after you hear this. Mr. Rock Lobster, what are you watching for the rest of this week, and what are your crazies over there in the pit chat? Are they slinging any GOOGL going into earnings, sir?
Overall, the guys in the pit chat like Google as long, so I don't think that is. I don't think they've slung any options, but I'm having a feeling after the Facebooks, I think social media is going to do very well. And I guess it'd be higher, but what do I know? It'd be just a guess. But it's one of my larger holdings, so I have not changed my mind on it one bit.
Google more than Microsoft? I know you're a big fan of Softy as well.
I have a little more Microsoft than Google, but also the Microsoft, it's starting to get longer in the tooth at $1 trillion market cap, so I don't really know what to do with any of them, to be honest.
Look at you slinging all the underlying. Aren't you antiquated and old school, sir?
I sling the underlying, and then I look for leverage with the options.
Okay, so at least you're jazzing it up a little bit. You're not just sitting there in that boring bourgeois stock. You're actually slinging some options. Okay, we'll give you a pass this time, sir. But next time, we want more options action to borrow a phrase from a show we don't watch. All right, and then let's go back to Uncle Mike, sir. What is on your radar, sir? And do you have any thoughts on the old Google?
I like the old Google. Curious to see where it will go to. I think it's a core holding on our strategic night, so we definitely like the stock. I think it's a good thing for sure. And just in terms of what I'm watching, just the same things as always. Just curious to see how the earnings are going to hold up, and watching a certain someone's Twitter account as per usual.
All right, everybody. That music means we have come to the end of another epic journey through the world of options. What a journey it was. Touched on some earnings at the top of the show. We touched on overall volume, what was going on in the space, correction levels in the S&P, how many options did we trade last year, how many options did we trade in January, all that good stuff. Looked ahead to some earnings, looked back to Clorox, looked ahead to Google and a few others out there. Again, you can find all that on theoptionsinsider.com. Talked all sorts of fun stuff in PAGP, Mattel, and CP, aka Canada Pacific Railway, is there. And then Uncle Mike breaking down some strategery, line in the sand, risk reversals, all that good stuff, boring from the rock lobster. We won't judge. And then, of course, your picks for next year's Super Bowl. All sorts of fun stuff before we go around the block. Let's go back around one more time. Let's go back the other way. Let's go back to Uncle Mike first. Mr. Uncle Mike, sir, what is coming down the pike? And if I want to go check out things that are fun in the land of wealth management, where should I go? What should I do?
Oh, by all means, go to my website at stcharleswealth.com. If you are interested in working with a financial advisor who is kind of in the option world, not afraid to delve his toe in the water as well. Well, quite frankly, it's the water with which I live, so more than a toe. But feel free to contact me. Go to my website for more information at stcharleswealth.com, or shoot me an email at Mike Tosaw at stcharleswealth.com. Would love to hear from you.
Hit the man up at St. Charles Wealth before he raises those minimums. The man's too busy. So hit him up before he gets even busier. And last but not least, Mr. Rock Lobster, sir, if I was intrigued by these line in the sand type trades, perhaps I want to take a masterclass on such things. Where should I go? What should I do?
Okay, so on over at optionpit.com. Our event for this week will be, this Saturday class will be, using options for all that long-term leveraging stuff. That will be our Saturday class. Go over to optionpit.com. To the event page and look for our 10-part masterclass on, well, if you want to learn to do what Tosaw does, take our 10-part masterclass and learn how to use them options the right way, to use the leverage how they're best designed, so you can give yourself a shot to make the kind of dough that Tosaw makes. There you go.
Be like Mike. In this case, Uncle Mike. Be like Mike. In this case, Uncle Mike. By going, ironically, to optionpit.com of all places. So check it out, optionpit.com. Take a masterclass. You too can become a master. All right, optionpit.com, stcharleswealth.com, the places to go. And, of course, theoptionsinsider.com. Always a place for you to go. Check out good stuff. And we'll see you back here later today, hopefully, for the crypto rundown, talking some good stuff on that side of the fence. A lot of things going on in the world of crypto. Otherwise, later this week for all of our other shows. And back here on Thursday again for the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.